the IMF's directive to the Bank of Ghana to reduce its intervention in the Forex market. And we've been joined by a professor of finance at the University of Ghana Business School, Professor Godfred Bokping, to throw more light on that. Professor Bokping, good morning. Thank you very much for joining us.
Yes, good morning, Preston, and good morning to everyone. Thank you for having me on your show this morning.
Great, Professor Bokping. So we've seen the IMF's, statement after they approved some $367 million for Ghana. They're talking about how the Bank of Ghana should reduce its interventions in the Forex market. First of all, help us understand what's wrong with the Bank of Ghana interfering in the Forex market. After all, we have always said that Bank of Ghana's work that it does is aimed at is inflation targeting. Everything it does seeks to reduce inflation when it comes to even monetary policy rate. So if we say we have imported inflation, shouldn't they be working on the exchange rate, Professor Bokping?
All right, thank you very much. To a large extent, your proposition sits quite well, but on a broader scale, and for more sustainability, one would associate more with the IMF, and I'll give you a couple of reasons.
Please do.
One of the important functions of the market is what we call price discovery. Mm-hmm. So, and that comes about when you allow the forces of demand and supply, from demand side, from supply side, to arrive at a price that will be reflective of what the true dynamics of the market is, if we are talking about the price. But where you have a situation where, as it currently stands, the central bank, being a regulator, is also a dominant player in the market. So Bank of Ghana has, to a large extent, upper hand in terms of control of FX, and how that FX is spilled over onto the market. So to that extent, the price signaling effect will come more from the central bank rather than the market playing its discovery role. And that is what we are seeing here. Now, when you have that situation, Bank of Ghana may have their reason. It may benefit us temporarily and all of that. But when you have that situation, market participants may have the impression that the true rate is not really the official rate, which is influenced to a large extent by the central bank. They wouldn't want to transact with that particular rate. Now, if you look at what is happening right now, if you pick the rate at the bank level, if you want to sell USD dollars at the bank level, you are likely to get it at probably 10.1 or so. Some are even doing 9.8 or so. However, if you look at the other layers of the market, the Forex Bureau, I don't want to even talk about the black market now, but I will eventually end there. If you look at the Forex Bureau, the price differential is working up to almost 20%. In some instances, the data we looked at, we're looking at close to 25%. Now, if you compare that to black market, you are getting close to 35%. So what that means is that you are operating a system where there are multiple rates. So you then have the official rate sitting with the banks or with Bank of Ghana, but the transaction rate will be outside the corridor, right? And when you do that consistently, you are actually fueling the development of the black market rather than roping in the transactions within the official or the formal financial system. So we have to look at the multiple entries of FX into the market. Okay. If you compare the multiple entries in terms of supply of FX into the market, and you compare that to the intervention of the central bank, the weight of the intervention is more on the side of the central bank rather than the trickling in from the forces of demand and supply, which should settle the equilibrium or the real exchange rates. Beyond that broader issue, the other thing to even look at is that, and I believe that the central bank is working at that. At one hand, one is likely to have a soft side from the central bank because of where we have come from. especially when the cedi had suffered a run consistently in the last couple of years. When the crisis peaked in 2022, the cedi suffered a run. It lost more than 50% of its trading value, and all of that. But the other bit to also look at over a long period of time is to look at it that the cedi, when it was introduced in July 1965, and you compare the value that was assigned to the cedi in July 1965 to the value it is trading right now, practically 99.99% of the value assigned to it at its best in July 9.
Hello, Prof. Oh, I think we've lost Professor Godfrey Bokping. Let's try and get in touch again with Professor Godfrey Bokping, who is Professor of Finance at the University of Ghana Business School. And he's been making the point that while you'd expect the Bank of Ghana to intervene, he thinks the intervention of the Bank of Ghana is too much. And so that's what leads to discrepancy that you'd find in, interbank exchange rate and even the Forex Bureau, and finally the black market, which he was reluctant to talk about. He's talked about the fact that you probably would realize that when it comes to how much the Bank of Ghana, say if you wanted to go and sell your dollars, how much the banks will buy it from you, about 10.1. But if you, get to the Forex Bureau, you're looking at between 20 to 25% more, and then 30 to 35% more in the black market. We'll try and get in touch with Professor Godfrey Bokping again, and once we do, we'll get into the rest of the conversation.
So that means people are buying the cedi for between 10 to 13 cedis, depending on where you are buying it from.
Yes. Okay. Yes, that's what that's what it means.
He was also talking about the value of the cedi from 1965 to date, and basically he says we've lost 99.9999% of the value of the cedi, and that's something we should also be worried about. But Winston, what is a black market?
Illegal market.
Illegal market.
That's all.
So black markets are illegal Forex markets.
Yes, they are.
Where are they found all around our key security hotspots?
Well, I mean, you've seen them being, picked up by the police. You've seen that, right? You've seen.
Me, I've not seen that.
Okay, they've been arrested. I'm sure, Blessed, we've reported these ones before. Yes, I mean, some of them have been arrested before. By the police, because there was a time that we actually felt that they were also part of the problem. When we're going through the challenges.
You go to the airport area, around the airport police station, you find these black market traders.
But they don't deal openly. What they do, they don't deal openly.
There have been a few instances that they've called. They've called.
Yeah, they call you and take you to a corner.
Come after me.
Well, I have seen. I saw someone engaging in that at the Achimota Retail Center. Now, this is how the transaction transpired. They spoke, and then the person is walking, and he, would turn around and put the money in your pocket, and then you also, take that. So it's not a legal market.
Look at the Kimbo area.
They're there, I know, but it's not.
Alaba, Kumasi.
They're there, we know, but it's not a legal business.
Is this something intelligence agencies cannot clamp down on?
Well, there's a certain reality, and people have jokingly said Abochi they control the dollar. There are instances where even in the regular financial institutions, they can direct you to these people. They have the dollars.
Do we have enough dollars with the banks?
Well, it looks like these days.
It looks like so.
It looks like, but then there are a lot of.
If we walked out here right now without calling our relationship managers or without calling our bank branches, and we needed, say, $10,000, can you easily get that today without going through any hassle?
Oh, you can go to the bank.
Are we sure about that?
Go to the bank.
Business people who need dollars for all sorts of transactions, who play in the Forex space, when you walk to your bank without pre-informing your bank, does your average bank have enough dollars to immediately give you what you need?
So
before it's a legal request.
Before we go for a break, I'll just make this point. Okay. So if say I'm a bank operating in a particular town, I'm not going to mention the town. Okay. I would look at my demand for dollars over a certain period.
Okay.
And know how much dollars I should keep. So for that bank, if you walked in now and demanded more above my minimum, my average dollar range over a month, I probably may not have it for you. It doesn't mean that my bigger branches don't have it.
Okay.
What it means is that maybe there isn't a lot of demand for dollars within that branch. So I do not keep a lot. You get the point?
So if you walk to any, say, head office branch of any of the banks,
You get it.
$10K, $20K, $100K.
Yes, you get it. Subject to,
All the legal
all the
requirements.
legal requirements, you get it.
So we have enough dollars in the legal system.
We do.
Okay.
We do.
So why are people still going to Abochi for dollars?
You know the answer. Stay with us when we return after these messages. We're going to get into a conversation about taxes, the modified taxation scheme. Stay with us. We'll be 99.7 FM, and earlier we had Professor Godfrey Bokping with us. We lost him, but he's back on the line now. So before we get into the conversation about the modified taxation scheme, let's just conclude our conversation with Professor Bokping. So, Professor Bokping, thank you for joining us again. You're making a point about, the interventions, but let's look at it this way. So, the Bank of Ghana has a role to play, and for us, what we are interested in is that at the end of the day, the CD to the dollar is at a level that we can afford. Help us understand the disparity between the interbank rate and the Forex Bureau rate.
Okay, thank you very much. Apologies for the interruption earlier.
Sure.
So it's about building confidence in the market. If market participants broadly have the impression that the rates are aligned and it's a true reflection of where it should be, they will not take their USD, for instance, from the former financial system, when I say more formal, within the bank, and head straight to the Forex Bureau or the black market, because there's some kind of pricing differential here, right? So that is what is fueling the black market. And when you do that, you're actually providing oxygen for the growth of the black market. And let me just give you a little bit of history to this. Maybe it may help. What we call Forex bureaus today were black markets in the 70s and 80s. Through the IMF World Bank-led reforms, the financial component, we call it the Financial Sector Adjustment Program, we decided to formally absorb the black market into the former financial system for purposes of regulation, transparency, management, and all of that. So what we call Forex bureaus today in the 70s and 80s were essentially black markets. And the black market had taken over the former financial system. Then, also because of lack of confidence in the pricing regime, price control and all of that, we've moved to what we call managed exchange rate system, where we still allow the forces of demand and supply, but then the central bank or the government can intervene. Usually the central bank can intervene in the market, sell dollars or buy dollars on its own account in order to manage excessive volatility in the market, or to steer it to a certain band that perhaps will not cause dislocations in the economy. So there's nothing wrong when Bank of Ghana intervenes in the market, and I'm not too sure that is what the IMF has issue with. It's about the excessive nature of that intervention that may create an impression that price distortion is happening in the market, because the primary function of the market is what we call price discovery, and that works well when we allow the forces of demand and supply to determine the price. That is what I believe is at play here. Now, look, if we align to a large extent with the Forex Bureau, maybe look at the dynamics very well, you are likely to see that the black market will die down considerably. In any serious financial market, right, all over the world, you hardly see the dominant role of the black market as we have it in our part of the world, and also the tendency of multiple exchange rates. We are going back to where we were before the IMF program kicked in. Could you go back to the original IMF supported program, the document that was approved on May 17, 2023? You will find that what the IMF is cautioning us against right now were all part of their diagnosis as part of that IMF supported program that we bought into, more or less, right? Because we were not allowing the markets to play the role. In fact, there was a strong influence by the central bank. They give the dollars to the bank and they give them a band or a rate within which they have to trade. So when it happens that way, the price signal is coming more from the central bank rather than the forces of demand and supply. But
Okay.
of course, if you see with the gold board, gold for reserves, and the rest of them, and then also some kind of revisions in the remittances market with the fintechs and the rest of them, Bank of Ghana has a considerable control of FX now, and they determine to a large extent how the market should play out at the end of the day. I believe that is where the issue is. If it happens that way, then perhaps, of course, we are using the managed exchange rate, or others will call it the dirty exchange rate system and all of that. But we need to look at all of this so that we don't create multiple rates, as you find the interbank rate, as you find within the rate within the bank, the Forex bureau, and then a different rate also operating in the black market and all of that. So I think I believe that Bank of Ghana is working at it. As I also indicated, if you take our history into consideration, what the CD has gone through from its introduction in July 1965, and what the value that was assigned to in the value today. Oh, even more, should I say more recently? Remember redenomination.
Yes.
When we decided to wipe away 4 zeros, of course, mathematically we count in thousands, but we decided to wipe out 4 zeros. I will not go into the technicalities of that. The value assigned to the CD from July 2007 was actually higher than the dollar.
Yes.
It was 0.98 to a dollar. If you look at that rate and you use what we call the variance decomposition analysis, you realize that almost 80% of the value that was assigned to the CD July 2007 has been wiped out and all of that. Okay, so what am I saying? If you don't focus on the fundamentals, structural transformation, economic transformation, that will drive a gradual, sustainable appreciation of your currency, and it's simply because of interventions, as we have seen here. Technically, you have a cause for concern what the future will look like, and I believe that is the caution the fund is giving us. This is also important, given that we have signals that we don't want to be under another IMF supported program, or worst case scenario, we are looking at policy support instrument that is mainly advisory. So it means that external checks where they can review the system and offer advice and even elicit compliance. In the absence of that, it may get worse when Bank of Ghana becomes extremely dominant in the market. Oftentimes, we are not accountable from that perspective.
Okay. Now, Professor Bokping, I mean, this is the challenge. So you have a gold board owned by the state trading the funds in the government of Ghana's account with the Bank of Ghana. They have it there. Then you have a lot of Ghanaian businesses which will trade, and their owners sometimes will keep these dollars with the belief that the cedi could depreciate further, and so they make some gains. Under the circumstances, what else can the Bank of Ghana do? Because it has the dollars. The gold prices are going up. It means we have more dollars. Gold prices, it means we have more dollars. What can they do?
If you do the forecast, will it remain like that?
Tell me.
For the foreseeable future, the answer would be no. We know the size, commodity prices, and all of that. So that is why you want to be a bit. Otherwise, you are likely to have wide swings. Okay, so when things reverses, it may happen suddenly also, you will not have a shock absorbers and all of that. But what is the most important thing is this. So if you manage your economy prudently, you build confidence in the economy. So people would then have the expectation that, you know what, the cedi is not going to depreciate as much as we have seen in the time past. I think that is what we should be focusing on. Otherwise, Bank of Ghana, it doesn't matter the fact that you have reserves. Gold is bringing reserves, cocoa and the rest of them. You have just a limited amount. Okay, so if that is the impression, and you keep spilling the dollars through the intervention, the market will mobilize the dollars, would actually keep it, and hoping that you continue to intervene, but you have limited reserves. What then will happen? What will happen is that they will still gain by speculating on that. So we should be looking at, and we've said this at the beginning of the year. In fact, when we saw the cedi strengthening aggressively, we said we need to be cautious. If the aggressive strengthening is not as a result of structural transformation and productivity transformation in the economy, then inferring sustainability will be a problem. And therefore, we should be measured in terms of how we intervene in the market. And look, whether we like it or not, the banks have the risk, but they don't have the dollars as much as one would have expected. That is the truth. Okay? And people also have dollars. Perhaps they are not trading the dollars within the more formal financial system because they believe that is not the true rate. And that is why you see that whether we like it or not, and that's the truth. If you check, you'll find that is what is happening. There's a direct interaction between the black market, the Forex Bureau, and the formal financial system. And it's simply because of this trading of different prices that we have here and all of that. Somebody will say that a good way to eliminate that is to align the rate as quickly as possible, right? Which means that this is what the rate should be, and it's not just because of the signal that is coming from the central bank as a dominant player. It doesn't matter how much gold is bringing to us today. It doesn't matter how much cocoa is bringing to us today. We've had that in the time past. But of course, I also do agree that the dynamics have changed now compared to what we were used to in the time past. For which reason, if you are doing the forecasting, you want to be very careful. If you look at the revolution in clamping down on illegal or smuggling and all of that, and the role of gold board and all of that, certainly the dynamics have changed to a large extent, and that is what also makes the central bank a bit more of a dominant player in now. We need to look at how we configure all of this in a way that still builds confidence in the system. Otherwise, people will still want to bet on the fact that the cedi will depreciate. It's just a matter of time. And then we should be situating all of this within broader structural reforms and value addition to our economy. That is what we should do. We should not be exporting raw gold and celebrating how much that has brought, especially when that is causing so much environmental distraction. So it's not sufficient to just say that gold is bringing so much, but we should be asking ourselves, at what cost to the environment? At what cost to health? At what cost to agricultural productivity? We need to look at that broadly rather than just celebrating that, yes, gold is bringing this. I think we should be able to design a system that causes less harm to the environment, and yet we are able to also get the much needed effects. Look, whether we like it or not, there is no way we sustainably can keep this by just exporting primary commodities as we have done over the years. We should be designing a system where we rather leverage on the value addition on our finite natural resources rather than just mining raw gold, cocoa, and the rest and exporting them. There is practically no sustainable future in that.
Now, the president indicated that the real value of the Ghana cedi is between, compared to the dollar, is between 10 and 12. Doesn't that indicate, for instance, the willingness of, say, the central bank to reduce its intervention?
We had indicated earlier that Bank of Ghana should build reserves. The fact that it's available necessarily doesn't mean it should be used away aggressively or massively or at scale as we are doing. That is just the point. Again, we are also not saying that the Bank of Ghana cannot intervene in the market.
But Prof, the president has indicated, and something the IMF would testify that even our international reserves, for instance, we've been able to meet the program target 1 year before the deadline of the program. Haven't we done well? Can't we then be focusing on, reducing constantly depreciating cedi?
Okay, so look at it this way. And should I say under the previous regime, I don't want to play into the policies of it. Until January 2025, the central bank had been building reserves aggressively. In fact, as at October 2024, we had exceeded the IMF ceiling. I contend, and I think I respect the previous governors of Bank of Ghana, because they had enough reserves if they wanted to push the exchange rate to about 9.5%.
Okay.
They chose not to do it. I believe that the reason they didn't was also because of the possibility of policy slippages in the run-up to the 2024 election. So I believe that there was wisdom, and I think it was the right thing they did. Because if you had uncertainty about how the fiscal side was going to behave, and of course, given our own history, in all the competitive elections that we have had since 1992, I think with the exception of 2004, the policy slippages, the fiscal slippages were huge, sometimes in excess of 5% of GDP. Okay, so if Bank of Ghana had intervened in the market in the name of just taking short-term credit and say that we have pushed the exchange rate to 10, okay, you would have seen that this government would have struggled when they took over. So they had built reserves and handed those reserves to the incoming administration. And I think at the end of the day, it's Ghana that had won from that angle. Okay, and as I said, I commend them for doing that. We need to be measured in terms of how we utilize the reserves, because now it's available. We are not building an economy that will last just 3 years or 4 years. Okay, we should be doing it in such a way that in the next 15 years or so, we can infer sustainability. That is where the confidence will come from. Given also, Kojo, that government is not spending optimally under given the 2025 budget, and you see the IMF also acknowledging that. And of course, I agree with government. The economy was, in terms of overheating, we needed to cool it down. So what the government has done smartly, and I think it's also fair to also congratulate Atu Forson and say he's really forcing, as others are saying, we have essentially used the 2025 budget to correct the imbalances that came as a result of the excesses of 2024 election, right? And restore the program on track. And now we're on track, of course, okay? Of course, it's not so different. In 2016, it was the same thing that we did. When we were done with the 2016 election, we had derailed the program objectives. To bring it back, we even extended the program by 1 year. So if you check again the fourth review of the 16th IMF program, and you compare that to the fourth review of the 17th IMF program, IMF supported program, you can see the similarities in terms of how we manage our election, undermine the macro, and at the end of the day, who pays for this? At the end of the day, is the taxpayer, businesses that are always taking the cost of this mismanagement. The politicians always get away with it. They always get away with it. Weak sanctioning regime, political settlement, and all of that. But at the end of the day, the bill will be picked up by the taxpayer, the ordinary Ghanaian, the mere mortal.
Okay, so if I get you, yes, think about the short term, but think more long term.
Yes, it's the medium to the long term measures you put in place that is what generates confidence in the economy. It's not so much of that, because people can see beyond the short term. People can see, for some people are even building reserves or building the bedroom economy in anticipation of a rainy day. 2027.
What do you mean by bedroom economy, Prof?
Oh, Kojo.
Winston here. Yes, go ahead.
Oh, Prof. Bedroom economy.
You want me to say so that you say I'm a bad person? You know exactly what I'm talking about, right?
Okay, go ahead.
We don't trust the financial system. Political actors. Look, Kojo, the truth of the matter is that in Africa, we have not built enough confidence in our own system where the upper middle class and wealthy Africans find comfort in keeping their money within the formal financial system for purposes of secularity. We don't have that. Look, our political financing, do they write checks? Have you seen one before?
Tell me, have you seen one?
I haven't seen one. I'm an academic.
Okay.
Even for research purposes. Okay, so look, I don't think that any serious politician in Ghana keeps all his money in a certain bank or in the banking system. They will probably hide it in real estate. That is why our property industry is driven by fraud. Okay, whether we like it or not, you see how they advertise real estate prices. They are not targeting mere mortals like you and I. They know who they are targeting. If you look at income levels, 80% of public sector workers in this country earn less than $400 a month. And you are advertising housing prices, $1.5 million, and the rest of them. Clearly, I mean, I don't want to go into the details. So those are the things that we should be looking at. How do we put the right measures in place that ensures that there's sustainability? And that is what the market is looking for. The fundamentals are right now, and we agree with Bank of Ghana and the measures they are putting in place, the collaboration and the coordination between the central bank and the Ministry of Finance and the rest of them. But the important question also is that the optimal way of utilizing the reserves we have now? What happens 2027, 2028, and the rest of them? I think those are the things. More importantly, as we exit the IMF program, remember there are 2 more reviews left. Okay, one to happen probably somewhere in November, and the board process concluding somewhere December or so, and then the final review probably somewhere March or April next year or so. But technically, the 17th IMF program is ending December 2025, because the last review will look at program targets at the end of December 2025. There is uncertainty, headwinds. Government will have to navigate that process and assure stakeholders that, yes, in the absence of another IMF supported program, or even if they are going for policy support instruments, that will also come with periodic reviews. How binding and how biting would that be? And what would be the assurance? What internal mechanism in terms of institutional fiscal restraint, similar to the adult supervision the IMF will offer? Remember, we are old, but we are not mature. We have age. It doesn't mean we have arrived. So anytime there's adult supervision from the IMF or the developing partners, and that should be a shame for us as a country. After 68 years or so, we can't really determine and decide and be bound by that this is the right way to go, and we are willing to pay the price. I think we should feel sorry for ourselves. But of course, let's see the progress that we make going forward. And this government has the best opportunity. Let me put it that way, because practically we don't have opposition in parliament. Okay, the NPP effectively worked themselves into a silent opposition, okay, by the way they conduct themselves. So the government has the leverage. In fact, there's a broader support for this government and what they are doing. So they should take advantage of that and initiate far-reaching governance reforms, structural reforms, productivity enhancing reforms, because you've got the numbers in parliament. In fact, it was the same expectation we had when President Akufo-Addo came to office in 2017, because he had the numbers. The goodwill was there. In fact, the goodwill lasted for more than 3 months under President Akufo-Addo's time. Those were optimal times to initiate painful reforms, okay, so that you balance it. By the time people get so much angry, the right thing has been done, and then we leverage on that. So if this government does not take advantage of the moment, we are likely to regret some time to come.
Professor Godfrey Bokbing, thank you very, very much for joining us this morning. We're glad you made time to join us. Professor Godfrey Bokbing is a professor of finance at the University of Ghana Business School.